The reason the stock market exists today as we know it is because it is a vehicle designed to transfer wealth from the bottom 99% to the top 1%. And one of the main ways it does so from a price action perspective is via breakouts in price. And in order to understand how that happens, we need to ask the question, when are retail traders most active? Retail traders are most active at times of elevated emotions. In other words, the places or times when retail traders lose the most money is during breakouts. When you buy shares of your favorite stock, so in other words, when you buy shares of Microsoft or Google or Tesla or Nvidia, do you think those companies need your 10 or 20,000 bucks? The only reason the stock market exists as we know it today is because retail traders dump paychecks in the market. That's the only reason smart investors are able to share in the success of their favorite companies. So those elevated emotions occur at times when price is breaking a prior level and doing so quickly and aggressively. And that's places on the chart that look like this. I mean, look at this. Look how freaking insidious that is. Look at this candle. Institutions want to go long. They don't have enough liquidity. What do? They take out these stops. Okay, so whenever you see candles like this is a gift, guys. This is a gift. I think you get the idea, but I'm going to spell it out a little bit more explicitly. When you see that aggressive price action, which is causing elevated emotions in retail traders, that is usually a sign that the price is soon going to reverse, if not immediately. Just look what happened last time price broke out above a very obvious previous high, which was here. Okay, there was an entire day of an extremely strong candle that closed at the highs. So obviously there's always a chance that a move can keep going. But in terms of probabilities, when you do see a breakout, there is a more than 50% chance that the move will at least come back to test the high that was broken. So for example, what happened here, price broke out and had actually a pretty big move after the breakout, but where did it return to? It returned back to test the breakout level, as it will do virtually every single time. Here's another major breakout. What did it do? It retested that level. And if every retail trader in the world suddenly woke up and said, you know what, I'm not going to FOMO into buying breakouts anymore. I'm just going to sit here and wait till the price returns back to the breakout level. Guess what would happen? Very soon after that, the stock markets would just close to retail traders. Or you'll go to buy your favorite stock one day and it'll say, sorry, the retail quota has been reached. So basically what I'm seeing here is this is the next sort of major high that's just recently been broken. And sure, price could move a bit higher, but something else I noticed specifically with Chinese stocks, we're looking at FXI right now, this market has a very consistent propensity to make deep retracements after breaking out. So the last time we had almost a 100% pullback. The time before that, roughly, an 80% pullback. And then before that, roughly an 80% pullback as well. So I am expecting price to make another deep pullback at some point in the near future. We do see this phenomenon on smaller time frames as well. If we sort of zoom in here, there would be quite a bit of retail being pretty excited by this big candle that occurred right after the breakout of this swing high, right? I mean, if we look at that, right, that looks like it might continue, right? That's getting a lot of traders excited. And then when they get this price action immediately after, of course, they're going to be disillusioned, right? They went long at this peak right here probably, or somewhere on that day, and then the next 2 consecutive days, Friday and the following Monday, they saw nothing but prices moving down. And I mean, look how bearish that looks. So of course, many of them are going to sell. The institutions are going to use that volume to accumulate, to buy, and then the price just takes off after that. We see that happened right over here as well. It took out that high, and intraday, this would have been a thick green candle, and maybe there was some news there, right? I mean, how big is this gap? This is like 10% in one day. Think about how much emotion is behind a 10% move in just one day, coupled with the fact that it's breaking out above a previous major high or intermediate high. They were probably, as soon as they saw this, they saw the 10% move, they saw the breakout, they're hopping on their computer looking for news. And of course, what does the news do? What does the news do? The news always explains a certain move that's happening currently in hindsight. So the news might say something like, of course this 10% move happened. It's completely warranted. It's completely logical because the government just injected X billion dollars of stimulus, or sort of what else would seem relevant that day. And when price completely rejects that move and goes the other way, they're going to find an explanation in hindsight of why that happened. And it's always going to make sense in hindsight. But the only thing that's really going on is a transfer of wealth. Retail traders are buying and institutions are taking the opposite side of that trade. And sometimes it really is just buy a small amount. That's all it takes. There's also stops here. Okay, that has the same effect. And sometimes it's even more egregious. Sometimes it's like this. Okay, that being said, there are times when there are breakouts that are sustained and they're not just fake out moves, and those moves have two signatures, two signatures, which are the breakouts are preceded by long consolidations. Okay, I'm going to show you examples on the chart. The longer the price consolidates before breaking out, the more powerful the breakout and the more staying power that breakout will have. The second is there is price action preceding the breakout, sort of the tail end of that consolidation. You're going to see a very gradual climb in price. It's going to be very muted and it's not going to be obvious because they don't want to attract a lot of attention while they're accumulating their positions. So, for example, look at how much this price action contrasts with sort of these rogue candles that we see on the false breakouts, right? Because what do these have in common? These engage retail emotions far more than something like this. And what I especially love to see is sideways consolidations with very small candles, which we saw right over here, and which we saw in Bitcoin before I sent out my alerts on Bitcoin the past couple of months, namely these right here. Okay. The consolidations that stay above the 9-day EMA are the most powerful types. And since we already have the Bitcoin chart pulled up, I'm going to show you that what I said about FXI is true for every major security. Whenever price breaks out, it almost always retests the breakout level. If we look back, sort of looking at this major breakout of this high, right? We see that it basically kissed it, right? It went and kissed this previous high and it moved back up. Same thing here. It kissed this high. I'm having crazy deja vu right now. We see that it did not test this breakout level. It tested this breakout level. It tested this breakout level. And although it didn't test this breakout level, what do you see about this breakout that sort of stands out from other breakouts? If you said that it was this very, very long consolidation before that breakout, you would be correct. Okay, the longer the consolidation lasts, the more likely we'll see a very powerful breakout that lasts a long time and does not retrace. Does this concept hold true on the downside, on bearish breakouts? Of course it does. We see right here, Bitcoin broke down lower, and what level did it test? It tested the breakout level, right? It kissed it. It did the same thing back here. Here was the breakout of that level, and it kissed that level. So next time you see price breaking out, check to see how long the consolidation was before the breakout. If you see a really strong VCP pattern before the breakout that lasted a long time, maybe several weeks, then there's a good chance that breakout is just going to take off and fly. So let's say we have a previous high, right? And the market comes back and it kind of comes close to that level, and it refuses to break out above it for some time. And then one fine morning, you see it break out. This breakout is going to be much more likely to be sustained than a breakout that looks like this. It's almost always going to do a violent retest of the level that it broke. Okay, we don't know if it's going to test the level and keep moving higher. We just know there's a really good chance it will test that breakout if there's no consolidation prior to the breakout. And what we especially like to see is if the consolidation is a VCP or volume contraction pattern. In other words, what we really want to see is higher lows. So if we see higher lows with volume contraction. So if we see it coming up to a previous high and we see sort of this triangle pattern forming and volatility is contracting, that's sort of the A plus setup. But once again, if it just sort of takes out that high without any sort of consolidation, we are expecting a retest of the high that was broken. So once again, just to summarize that for a proper breakout, what we look for is the length of time or duration of the consolidation. So for the one we saw here back in 2023, this lasted from March 2023 until October 2023. So that's what, 6 months? So even though it wasn't the perfect price action, we didn't see sort of the optimal setup we really want to see with the contraction of volume and higher lows, right? We didn't really see that, but that duration still made this a very powerful breakout. And if we see both, then it's good night, Irene. Let's see if we can find a consolidation that took a long time and had a proper VCP pattern. Doesn't look like we have to look very far. So here's the consolidation. It lasted quite a long time, and toward the tail end, we saw a series of higher lows. So not only did that consolidation sort of have a slight upwards incline, which you really like to see, but if we zoom in even more, we see that toward the tail end, we had quite the classic VCP pattern before it took off. And we saw that again, already before this huge move. We had a significant move that was preceded by this beautiful VCP pattern. I mean, that's just picture perfect. And as you can see, even in most breakouts that happen after a really beautiful and long-term volume contraction pattern, it still generally revisits the breakout level. So in other words, in this case, back in July 2020, price did retest that level that was broken here. It didn't do that here. Here it just took off. And once again, I mentioned a couple of minutes ago that we want to see price maintaining above the 9 EMA, and look how effectively that it maintained above the 9 EMA here. I mean, that's just incredible. It refused to go below it. Anyway, good luck with your trading and reach out with any questions.